The initial 5G networks went online in 2019, but this massive project will include a ton of collaboration and investments from so many different categories, from semiconductors to small tech companies to equipment, infrastructure, and even real estate. The even better news is that there's going to be a ton of opportunity for us, the teeny little investors out here, to get our share of the big 5G pie. This is part 2 of my top 5G stocks to watch. And in part 1, I covered the 5G companies you can consider in the semiconductor category. In part 2, I'm going to reveal the top companies in equipment and infrastructure. In part 3, I'll move on to real estate and the ETFs that are loaded with the top 5G stocks that you can consider. And I'll also reveal the 5G stocks that I'm personally invested in. So when you subscribe to my YouTube channel, make sure to click on that bell notification button so that you don't miss out on my next stock analysis videos. We're going to cue in the intro, and while we do that, head over to the comment section and tell me which 5G category are you the most excited about. I can't wait to hear your comments. We're gonna cue in the intro, and let's go. Hey guys, I'm Kiana Danielle, 3-time author and the founder of the Invest Diva movement, the march to jump on in order to take control of your financial future and to make your money work for you. I analyze tens of assets every single week for our premium investing group members, or the PIG members. So if you'd like to know how you can get 3 months of free PIG membership, make sure to open up a new browser and type in learn.investdiva.com/yes. Register your seat for my next upcoming free masterclass, and then come back here so that we can get into the 5G stocks. All right, we're analyzing the top 5G stocks in the equipment and infrastructure category. The largest cap company in this category is obviously Apple. So although still limited in scope, 5G networks are already here. And the only issue, apart from living in a compatible location and being a compatible network, is that you also need a 5G enabled phone too. So most phone makers have now released 5G devices already, but we're still awaiting the first 5G enabled iPhone. The word on the street is that iPhone 12 Pro and Pro Max will be 5G, and with the standard iPhone 12 model sticking with 4G. Another possibility is that there will be a separate version for 5G. A lot of people think that that would be unlikely. To be honest with you, there's just too much rumors around when the iPhone 5G will be launched. And you can take a hint of when they launched their 4G network, so with how much delay in comparison to other phones. But I kind of feel like their release of 5G may not be the best thing to base our investment strategy upon for Apple. In other words, Apple has so much other stuff going on right now to make or break for our investment decision. So for example, Apple fans say that between greater smartphone penetration in the emerging markets and repeat sales to current customers, Apple has plenty of opportunity to reap the rewards of its iPhone business regardless of 5G. Apple's iPhone and iOS operating systems have consistently been rated at the head of the pack in terms of customer loyalty, engagement, and security, which bodes well for long-term customer retention. And we think that Apple is still innovating with introductions of Apple Pay, Apple Watch, Apple TV, AirPods. Each of these could drive a lot of revenue, but more crucially will help retain iPhone users over time. So while Apple certainly is one of the most cash-rich companies in the world, it still has some critics when it comes to its stock value. For example, some bears say that Apple's decision to maintain a premium private pricing strategy could help fend off gross margin compressions, but could limit unit sales growth, as devices could be unaffordable for many customers. If Apple were to ever launch a buggy software update or a subpar service, it could diminish the firm's reputation for building products that just work. So we're just now expecting Apple to work. And if it doesn't, people are going to be quick to criticize it. Apple AI, this is very interesting. It's more secretive compared to Google. They publish their research openly. So a lot of people believe that Apple may have a harder time recruiting AI talent. Although they did recruit Ian Goodfellow in April 2019, who is one of the top AI people. Another thing that people worry about Apple's recruiting is that its company's culture has suffered since Steve Jobs passed away, and it's not as empowering to work there anymore. And if you talk to anyone who worked at Apple, you probably know that it's not the best place to work at anyway. So recruiting remains a challenge. And when you're looking at a stock, you really want their team and management to be on top of things. And with Apple, that sometimes is neglected. Looking at the technical analysis, as you can see, we've been following Apple for a very, very long time. And the interesting thing about Apple's price action is that every time it reaches a peak, it retraces to the 50% almost, the 50% Fibonacci retracement level. And this has actually become more severe as Apple's price reaches higher highs. So for example, when it reached the new highs, at the time, the all-time high of around 230, it retraced back to the 61% Fibonacci retracement level. Then again, when it reached the new highs of 322, it retraced, well, this time it actually retraced to 50%. It did touch upon the 61% Fibonacci retracement level. Right now, it is actually moving towards the next resistance level that I've identified at around $405. And from there, we could see yet another pullback when it comes to its price. So for that reason, I've identified buy limit orders for Apple. If you don't have any Apple, you could consider getting into it at the current market price just to have some exposure, because you also don't want to miss out if this pattern doesn't repeat itself. But if you already have some Apple shares and you want to add on to your position at optimal prices, you could consider setting buy limit orders if the price reaches 405 and it starts going back down. Then you could consider setting your buy limit orders at one of the key Fibonacci retracement levels, which include, well, 361, 332, 306. And then we move on to the 38% Fibonacci retracement level here at 287. Apple pays a dividend payment of 0.88% yield, which is not that much, but considering how valuable its stock share is, the more shares that you have, the more of its dividend payment you can also collect. Its earnings are coming up on July 30th, 2020, so we could see a little bit of a volatility then. And if they miss the expectations, we could see the retracement happening right there and then. Apple is one of the largest companies in the world with $1.624 trillion in market cap. So all in all, I'd say that Apple is bound for further growth regardless of 5G. But if you'd like to add it to your portfolio, you might want to consider setting lower buy limit orders so that you can buy it at a cheaper price. The next 5G equipment company is Samsung, also known as Agent 005930.KS, listed on South Korea's stock market. Now, if you're not in South Korea, actually getting your hands on Samsung stocks is pretty tough. American investors can't buy Samsung stocks shares the way you typically buy it through major US exchanges like NASDAQ and NYSE. Instead, individual shares of Samsung stock must be purchased either over the counter as a pink sheet stock, which means your purchase isn't regulated, or on the Korean exchange, KRX, which entails opening a South Korean brokerage account. Now, Samsung's OTC over-the-counter symbol is SSNLF. So most investors prefer not to go that route, and for that reason, one of the easiest way to actually buy Samsung stocks in the US is going through an ETF that I will cover in part 3 of these series. But for now, let's take a look at Samsung individually, because even if you do go with an ETF, you want to make sure that it has a heavier holding of your favorite stock compared to those that suck, right? Samsung's market cap in South Korean currency, or won, is 356 trillion won, which is roughly $300 billion. So significantly smaller than Apple's market cap. It does pay a dividend payment, which you may not be able to get a hold of if you're investing in the ETF. And its earnings are coming up on the same day as Apple on July 30th. So we could expect a little bit of a volatility around then. Samsung's 5G phone is already out, but I mean, the thing is 5G infrastructure is not yet built. So having a 5G phone is kind of useless. but you know what? It could do for a great marketing. My sister swears by Samsung phones, but she always ends up buying an iPhone because of lack of customer service. Samsung fans say Samsung is maintaining its technology leadership in memory. Growing sales of memory semiconductors to unaffiliated customers has been great for the company, and robust sales growth of system LSI and foundry, including LED, could continue. Now, Samsung bears say Apple rules, and that in an era of smartphones with larger screens and more capabilities, some people have started to question the continued usefulness and viability of computers. And yet, rather than backing away from personal computer market, Samsung is actually doubling down, having introduced several new lines of laptops. Now, that is up for debate. This could actually be a bull or a bear argument. Now, I'd love to hear from you. Which device would you rather use? iPhone or Samsung Galaxy? And when 5G is out, will you switch? Why? Head over to the comment section and let me know. And while we do that, let's get to the technicals to see the price action of Samsung. So here I'm looking at Samsung's price action. This is quoted in South Korean won. As you can see, Samsung's price has generally been on a growth category with some volatility along the way. It lags behind Apple's shares price after the COVID-19, as it has not yet reached the previous all-time high levels. So for that reason, the current market price may not actually be a bad place to start investing in Samsung if that is your cup of tea. We're looking at this on the weekly chart, so applying the Fibonacci retracement levels actually also confirms the fact that the current market price is at an important psychological level. If you would prefer to buy it at an even lower price, and if you're okay with potentially missing out on buying Samsung altogether, you could consider setting your buy limit orders at one of these key psychological levels, which fall on the 38%, 50%, 61% Fibonacci retracement levels, respectively. Again, since Samsung has had a reputation of consolidating in the past, there is a higher potential for its price to retrace back down to any of these levels in the medium to long term. If I were to buy the Samsung stocks, I probably would not keep it long term. I would set profit targets at any of these levels based on the Fibonacci analysis. The 78%, the 61%, and 50% maximum, and then I'll conduct another analysis to see where Samsung stands globally. Again, normally how I conduct my strategy is that I get in and out partially, meaning I don't get all in at one specific price. And I do that just to mitigate my risk. The next 5G equipment company is something that you may not have heard of, and it's Corning. This is behind the scenes company. And before it gets turned into a high-tech speed Wi-Fi signal, 5G data actually needs to travel along the wired internet just like other data. And that's where fiber optic cable comes in handy. And Corning, GLW, the veteran glass and ceramics manufacturer, is a top provider. Even as they deploy new radio towers, many telecom providing 5G also need to beef up their back-end networks with high-speed cable. So Corning is a top supplier for many of those companies, and it also is getting into small cell antenna space, partnering with Qualcomm, which I covered in the part 1 of my 5G video series, to supply and building network equipment to help solve some of the problems 5G signals have in penetrating solid surfaces. Corning has a market cap of $20.15 billion. It has a long dividend payment history at 3.28% yield, which doesn't hurt here either. And its earnings is coming along the same time as those for Apple and Samsung, end of July or beginning of August. Now, this is all great, but what is the optimal price to buy Corning if you're a fan? Corning's fans say the ability to create thinner, larger glass substrates. Corning's fans say the ability to create thinner, larger glass substrates should support ongoing demand for larger LCD panels. A history of and commitment to research and development has enabled Corning to set the pace for innovation in the glass business and will allow it to protect its market leadership position. Data requirements from Internet of Things IoT, 5G, and autonomous driving should support the ongoing optical fiber demand, which are all great. But then again, we have some critics who say high capital intensity will remain an obstacle to free cash flow conversion. Corning's exposure to consumer discretionary spending can cause the company's revenue and earnings to fluctuate significantly. Volatility may actually not be a bad thing when it comes to buying its stocks. We'll talk about that during the technical analysis side of things. And last but not least, the display market could become a bigger issue. So with all this, if you're still a fan of Corning and you'd like to add it to your portfolio, we need to go ahead and take a look at its price action. As you can see, Corning actually has had a little bit of a difficulty here. It reached an all-time high of 110 back in 2000, and then it crashed like crazy. And ever since, it's basically been consolidating in this tiny little wave. It reached an all-time high level back in 2019, then it dropped, and the new highs that it reached in 2019 is a little bit higher than the previous high. Here are the levels that I'm talking about. 27 and 35. This was on the monthly chart. Now let's get to the daily chart to get a more medium-term view. Corning's did take a hit during COVID-19 pandemic and is now on its way back up to recovery, and it has not yet reached the new highs of around 35. So for that reason, the current market price just below 27 may not be a bad place to get started. If you're not the biggest fan of Corning's and you'd only buy it if it's like just the best price ever, then you could consider setting buy limit orders at these Fibonacci tracement levels at 24, 22, and perhaps even 18 respectively. Now, 5G could boost Corning's stock shares above the recent highs. So if I were to take profit from Corning's after investing in it at an optimal price, I would consider one of these levels: 35, 40, 42, and 44 for now, and then circle back and analyze the stock price again to see if I want to stay in it longer term. Now I'd love to hear from you. Had you ever heard of Corning before this whole 5G hype began? To tell you the truth, I actually hadn't. Last but not least in the 5G equipment category is the small but steadily growing Ciena, a company that offers fiber optic equipment and design services to communication companies. Ciena used the ramp up to 5G to pay down debt and to increase its cash reserves. That's great, especially for Wall Street analysts who only look at the financials most of the time. As organizations update their systems to handle 5G, this small firm enjoys a prime opportunity to offer both the engineering and the materials needed. Ciena has a market cap of $8.5 billion. It doesn't pay dividend payments, so for those of you who are interested in long-term fixed income, this may not be the best stock to be in. Its earnings is coming up after the earnings of the previous 5G stocks in this category, beginning of September. Ciena's fans say a growing network traffic and demand for bandwidth remain a strong tailwind for Ciena's applications. The company has meaningful drivers, including share gains in markets like carrier transport and web scale and the WaveLogic 5 DSP. Critics say Ciena saw strong data center growth offset by weaker service provider demand, and the COVID-19 could tap the brakes on data center growth in the second half of 2020, and issues with installation delays and capital expenditure uncertainty could likely sap some of Ciena's revenue momentum in 2020. Now, what does this all mean for Ciena's price action? Let's get into technical analysis. Ciena's price action is kind of similar to that of Corning's, and it topped out back in 2000s, and then it crashed at the dot-com bubble burst, and now is having trouble reaching the all-time high levels. But on a more positive news, it just broke above the 2008 highs of 49, right over here. The next high is that of 2005, which is just reached and is having difficulty breaking above. So for that reason, this level at 56 could create a resistance for Sienna's stock price share. And if enough bears jump on board, we could see Sienna's stock price to drop again to one of the key support levels at 49, 44, 36, 31, and even 24, which is a 61% Fibonacci retracement level. Now, because Sienna has been very volatile in the past, any of these levels actually have a high possibility of reaching. Now, since 5G networks are going to accelerate the potential of Sienna's stock growth, I could imagine stock price breaking above this resistance level at some point once 5G is finally out, creating profit-taking opportunities at one of these levels at 67, 75, 81, and 87. Now, remember that this could take a little bit of a time. These are not day trading strategies. If you get into Sienna stock, make sure that you have the patience to stay in it for the long term. That does it for the top 5G stocks in the infrastructure and equipment category. Now I'd love to hear from you. If you were to pick only one stock in this category, which one would you pick and at what price will you buy? I'd love to hear from you. Head over to the comment section and let me know. As you know, my life's mission is to help moms to take control of their financial future and to make their money work for you. So if you have any moms in your life, whether it's your mom, your wife, your friend's mom, anything, I would really appreciate it if you could forward the Invest Diva's mission to them and have them attend my free masterclass by sending them the link learn.investdiva.com/yes. Please help us grow this movement. It means a lot to me, and we're seeing a lot of success in our community, and we're there to help all these people. Now, if you're not a mom or if you're not a dad, you're still more than welcome to join us, but we'll only ask you to be supportive of our mission by contributing and being positive in the Invest Diva community. Again, thank you so much for joining me today in this session of the Invest Diva stock analysis. I can't wait to see you again in my next video, part 3 of top 5G stocks in the real estate category as well as ETFs. Invest responsibly, and remember, the only path to true wealth is by making your money work for you.